Welcome to this special webinar hosted by PwC Nigeria to discuss the economic implications and policy response to COVID-19. These are indeed very difficult times, so I hope you are all staying safe, as well as having serious implications for people's health and the healthcare services. COVID-19 is having a significant impact on businesses and the economy worldwide. The impact is being felt by all forms of businesses, large and small, and in all economies, developed or developing. No one appears to be spared. For the past 20 years, PwC has been conducting a global CEO survey, which highlights main threats and thoughts of top business leaders. And in these last 20 years, I cannot recollect that any CEO has predicted that there will be this magnitude of disruption in the economy. We'll continue to listen to health experts on what we can do to flatten the curve, as they say. I will also use this opportunity to urge us all to continue to keep to the instructions around social distancing, as well as our hand and respiratory hygiene. We are working with the Coalition Against COVID-19 in supporting the Project Management Office. Our staff and alumni are also working on an initiative where, due to personal contributions, we need to supporting initiatives around providing resources to the more vulnerable in our society. In this webinar, we will discuss the macroeconomic implications of COVID-19 for Nigeria, the policy responses by government, and how all of these may impact you and your businesses going forward. We'll also be sharing the inputs from the session with relevant policy makers to further strengthen their response. I must say at this point that there's no doubt that government's response has been swift and commendable as it works to address various aspects of the challenges. From our close interactions with a cross-section of shareholders, stakeholders, and even by just listening to the news, this is indeed a learning curve for everybody. Therefore, now, more than ever before, we see that partnerships between stakeholders, especially between public and private sector, is the key to success. It's in this respect, I humbly wish to welcome the Executive Chairman of the FIRS, Mr. Mohammed Bami, the Chairman of the LIRS, my good friend, Mr. Ayodele Zube, and the Secretary of the Joint Tax Board, Mr. ML Abubakar, who have graciously joined us today as special guests. I'm also very well aware that a number of people in leadership in the public sector are on this call. You will hear from these three special guests later. Thank you once again for joining this webinar. I look forward to a very insightful session as we continue to do what is necessary to remain resilient in these obviously extremely challenging times. Thank you very much. I'll now yield to Dr. Andrew X. Nevin, our Chief Economist at PwC Nigeria, who will share insights on the macroeconomic implications. Thank you again.
I'm Andrew Nevin, Chief Economist and West Africa Financial Services Leader for PwC. Please allow me to stand in all existing protocols. I'm going to spend the next few minutes talking about COVID-19 and the impact on the Nigerian economy. Let me start by saying that in February or so, when we were starting to realize the severity of this, economists around the world were very slow to pick up on the economic impact. People at the time were saying maybe impact 2% world growth, 1% world growth. I think in the last 4 weeks, people have really come to understand this is the most significant economic shock we'll ever experience in our lifetime. Here are some quotes from different global groups. The IMF, the fallout is way worse than the global financial crisis. The World Bank, coronavirus, millions will be left in poverty. Of course, there may not be millions, it may be hundreds of millions. So I think there's no question now that around the globe, everyone recognizes that not only do we have a medical crisis, but we also have an economic crisis of unprecedented scale. Of course, in Nigeria, we're an oil exporter. And as a result, we're doubly impacted by the overall economic impact, the impact of lockdown and distancing in Nigeria, but also the collapse of the oil price. So as you can see here on the chart on the top, we've seen oil price average less than $40 in March. Today it's about $32. It's been as low as $23. And the impact of COVID-19, of course, is to take out at least 10 to 20 million barrels a day of demand for oil, so 10 to 20% of world production. The net result of that is that we can't expect any increase in oil price in the near future. It's also had an impact on the stock market, as you can imagine. So on the top left-hand chart, for example, we see that at the beginning of the year through January, almost every major market was positive. The US was up 30%. Europe was up about a quarter, but all of that has been reversed and more. And now we see losses in the stock market. It's so volatile, but losses anywhere from 20 to 35% in every market. And on the right-hand side, we also see there's an impact on the exchange rate. It's not just Nigeria where we've had an exchange rate change, but countries around the world, including other developing markets like Brazil and Turkey, where there's been a rapid depreciation against the dollar. On the bottom right-hand chart, you can just see the collapse in confidence as expressed by the Purchasing Managers Index. So under 50 indicates we're going into recession. You can see all of these countries were under 50 in February. The situation has only deteriorated from then, and I don't think there's any question we're in a recession. Of course, Nigeria's stock market has not been immune from it. As the day that we did this, perhaps about a week ago, Nigerian market was down about a quarter after a promising start to 2020. The South African market, the largest stock market in Africa, is down more than 1/3 as a result of COVID-19. We can also look at this by what CFOs around the world are saying. So this was a CFO survey that was done by PwC about a month ago on March 11th. 80% of CFOs surveyed at the time believe there'll be a global recession. You can read some of the other statistics. I think it would be fair to say now that today 100% of CFOs would say that we're in a global recession. Of course, with this fast-moving COVID-19 health and economic crisis, major groups around the world and every country has reacted. So here are some of the programs put in place by some of the global pan-global institutions. So the World Bank, for instance, is prepared to deploy $160 billion to support its client group. IFC has got almost $10 billion so far for private sector. IMF has its emergency program of $50 billion. I think 80 countries so far have applied for that. AFDB, Africa Development Bank, for example, has already issued a $3 billion bond with three-year maturity. So groups recognize the enormous economic and health destruction and are reacting very, very quickly to try to mitigate it. At the national level, in developed countries, we've seen an unprecedented fiscal response. So if we take, for example, the United Kingdom and the United States, the total fiscal response that we've seen so far is somewhere like 10 to 15% of GDP, which is just unprecedented, as I said, in our lifetime. There have also been monetary policies with interest rate cuts, and the Federal Reserve has introduced a $700 billion quantitative easing program that I think since then has been expanded several times. Even Germany, which is normally fiscally very conservative, has stepped up to the plate during COVID-19. They've got a 150 billion euro fiscal program to support small business owners. They've also created a fund for loans of up to over 800 billion euros, which is 25% of GDP. So you can just see how large an impact economically they expect COVID-19 to have. China's done a similar thing. Even in developing nations, we're starting to see this fiscal stimulus. India's announced a large program to support the healthcare sector, but they've also had programs to support the bottom of the pyramid and to make sure that food is getting to everyone. So, for example, here we cite the program in Kerala, southern state in India of about 30 million people, where they've allocated 200 billion rupees to support poor households with basic necessities. In Africa, countries have been quick off the mark to also deal with the COVID-19 economic distress. So in South Africa, there have been a number of fiscal measures put in place around the unemployment insurance fund and special programs for companies. They're also trying to get money to the bottom of the pyramid, so workers with an income below a certain threshold get a small monthly payment, essentially so they can eat. Ghana has been very quickly put in funding, $100 million to support their healthcare system. In addition, Ghana was one of the first countries to ask for IMF help in this crisis. Kenya has done a similar thing in earmarking money for healthcare funding. They've also done something we think that's very important, which is they're expediting payments of existing obligations to businesses, to contractors, to keep money moving through the economy, because everyone's spending is someone else's income, and if the government is not paying its bills on time, then the people that are supposed to receive that money won't be able to go out and buy what they need, which means that the people that sell what they need are also going to suffer. So the one thing we've all learned about this is the economy is a system where everyone's connected. The other thing in Kenya they've done that's very interesting is that the president and his deputy have taken an 80% pay cut. Ministers and their assistants take pay cuts from 20 to 30%, and this is every month. So in Nigeria, the 43 ministers agreed to donate 50% of their March salary to COVID-19, but in Kenya, this is a cut until the COVID-19 crisis has passed. Excuse me. In Nigeria, the federal government has also been very active, so we've had several programs focused on the healthcare area, funding for the Nigerian Center for Disease Control, NCDC. There's been a 500 billion COVID-19 crisis intervention fund put together by the government and the private sector together. We think very important, again, is this fiscal stimulus for the bottom of the pyramid. So the president has approved the employment of 774,000 Nigerians to ameliorate the suffering caused by COVID-19. So these young people are in 1,000 each of the 774 local government areas to help where they can, and also as a fiscal stimulus. Very important that that money gets to the people it's intended to. There's also been a 3-month repayment moratorium for all trader money, market money, and farmer money loans with immediate effect. And some other programs I think are here just show that the federal government has been very active in trying to address the fallout of COVID-19. Similarly, there have been programs from the monetary side. So the CBN has reduced the interest rate on all interventions from 9% to 5%. They've also put in a liquidity injection of 3.6 trillion in the form of loans into the banking system and a number of other interventions. Of course, despite all these interventions, the reality is Africa is going to have a very difficult time in the next period dealing with the economic fallout of COVID-19. You can just see some of the headlines. South Africa declares state of disaster as coronavirus threatens to derail the economic recovery. Nigeria's own finance minister says Nigeria will go into recession. Kenyans brace for tough economic times. The other thing that's important to note is that we have seen, of course, the coronavirus enter the index case into Nigeria through Lagos, but the spread has been to quite a few states here. And if we judge by what's happened in other countries, that tends to be the pattern. It comes into a major city, but it spreads throughout the country. I think the message that we want to leave is we're not at the end of this. We're just at the beginning of this. As you can see, while there are quite a number of states have been affected, not all the states have been affected, but there's no reason not to think that coronavirus wouldn't eventually be in all 36 states of Nigeria. So where does all this leave us from an economic viewpoint? There's no economic model for what's happening right now with the pandemic. So we have no way of mathematically modeling the impact on the economy. But based on what the World Bank and others have said about Africa's economy, and the fact that we are also tied to oil, as we said, we are not projecting, we're literally guessing that we're going to see a contraction of the Nigerian economy in 2020 by about 5 to 10%, or perhaps it could be worse than that. To put that in context, in the terrible recession of 2016, the economy shrunk 1.6%. So this is magnitude upon magnitude worse for Nigeria from an economic viewpoint. And what's the impact going to be? We're going to have a massive spike in unemployment, a massive number of people in the informal sector not earning their daily wage. We're going to have a food security challenge. We're going to have a fiscal crisis at both the federal government but also the states, who find their federal allocation has collapsed and that they don't have any resources or backup to be able to pay their recurrent expenditure. We should also expect a continued depletion in our external reserves, which have been declining over the last year. So how do we address this? To begin with, the overriding priority of the government needs to be the health and safety of Nigerians. So that is the number one consideration. But as people work on the healthcare impact of COVID-19, we also need to think about the economic impact and the economic recovery. And we're recommending 4 key pillars for that. The number one pillar for us is to get resources, to get money into the bottom of the pyramid and to keep the food supply chains intact. Nothing else that we do is going to help if we don't feed Nigeria's people on that. And we've gone through a number of the programs like the 1,000 young people hired in each LGA. They're absolutely critical to get money in the hands of the bottom of the pyramid. But at the same time, we also need to make sure that the lockdown restrictions don't prevent food from getting where it needs to be in the country. There's no point in having food stay where it's grown and can't be eaten and not get to the people that need it. The number 2 pillar for us is the government needs to tap all the resources it can for this. So we've talked about the World Bank programs, we've talked about IMF programs, African Development Bank, and they also need to tap our donor agencies, DFID, USAID, the European Community. And in addition, we need to make sure that the diaspora continues to support Nigeria. Many diasporans are under economic pressure themselves, but they're in countries that are giving support. And we need to make sure that the diaspora doesn't forget that in Nigeria, the needs are still great. The third pillar from PwC is what we call fiscal stimulus and cuts. So we need appropriate fiscal stimulus, like Kenya's program of paying legitimate contractors. We need to pay pension arrears. We need to continue with critical capital projects when they employ Nigerians to keep money flowing in the country. But we also need some selective cuts to send a signal. So the programs where the high cost of governance are addressed, so the high cost of elected politicians, of senior civil servants, because that sends a signal to the country that everyone's in this together. The other piece of the fiscal stimulus is there needs to be some program for the states. As I said earlier, almost all states are going to essentially be fiscally insolvent in a month or two, and there needs to be some program for the states to be able to get through this in a way that makes sure that the money gets to the intended usage to keep education going, to keep healthcare going, and to keep the state going. And finally, we do need to think about restructuring for the future. Now, already in this COVID-19 crisis, there's been 2 major changes to the economic structure of Nigeria. The fuel price has been deregulated effectively, and also we've had a major shift in the exchange rate and a narrowing between the official exchange rate and the parallel rate. So I think it sends a signal the federal government is prepared to do some restructuring. What else should we need in this country? Well, we think the number one thing is we need to unlock the dead capital that the federal government has across many industries and in all parts of Nigeria. So this includes industrial ownership, it includes real estate. These are assets that the federal government has that are not giving a return to Nigeria. And even though we might not be able to unlock it in the short term, we believe that we should start the process of unlocking it, send a signal to investors in Nigeria and elsewhere. Coming out of COVID-19, we're going to be open for business and we're going to be doing things that help the economy expand. The other thing that we think is critical is this crisis needs to be used to make sure we get the right reforms in the power sector. So Governor El Rufai of Kaduna has been leading a high-powered committee the last few months on this issue. We expect some quite bold recommendations coming out of it. The country needs to follow those to make sure we get the power sector sorted to get the industrialization we need. And the last recommendation is we would like to see a review of the NMPC just to make sure that the federal government is getting the most out of NMPC. It's the most valuable asset of Nigeria. It's critical in this economic times that we get all we can out of the NMPC. So we're recommending a review of that to make sure of that. So 4 key pillars to address the economic fallout from COVID crisis. So just in conclusion, just make no mistake about it, I think PwC's perspective and those of commentators around the world is we are in the most difficult health and economic crisis any of us will ever have to, we hope we'll ever have to face in our lifetime. Nigeria needs to stand together with Africa, with countries around the world, with the multilateral organizations to address this and work through it. Thank you so much, and God bless Nigeria.
Thank you once again for joining us today for our webinar on COVID-19, economic implications and policy responses. My presentation will focus now on the fiscal policy responses aspect, including tax interventions and a couple of other measures. So these fiscal policy responses are not just by the federal government alone. It would also cover responses that we're seeing from subnationals, particularly the states that have been affected by the outbreak of the pandemic. So the outline of my presentation would start with the background and context, and then we look at Nigeria's fiscal policy responses, then tax and other measures, and then some lessons from the rest of the world, and then I will share my final thoughts. Now, in terms of the background, I think the key message here is that Nigeria, has had its own fiscal challenges even before COVID-19. And these challenges are only now being compounded by the outbreak of this pandemic. And this range from the very well talked about low tax to GDP ratio to high debt service to revenue ratio, low level of tax compliance. And of course, because of the pandemic, we now have significant fiscal risk and economic disruption. There's also the exposure we have in terms of the risk of sustained decline in oil prices. As a matter of fact, as of last week Friday, dated Brent was as low as $19 per barrel, even though we're beginning to see the recovery now as a result of the potential that OPEC Plus might be able to strike a deal to cut production. But the thing again is, as you cut production and prices go up, then your volumes will come down because then cuts mean that you produce less. So overall, this is not a very promising picture for Nigeria. Compared to our budget benchmark of $57, we're now thinking about a budget benchmark, revised benchmark of $30 per barrel. Oil production year to date has been around 2 million barrels, compared to our projection at the beginning of the year for fiscal year 2020 of 2.18 million barrels per day. One thing that is different between the previous crisis, the financial crisis of 2008, and also the most recent recession of 2015, 2016, what is different now significantly is that we have little fiscal buffers than we did previously. So the ability to maneuver is much less. And then you see, fact, federal government as well as subnationals, particularly states, rely so much on allocation from the federation account to meet their monthly needs. At the beginning of the year, the projection was about 888 billion naira will be available monthly to be shared amongst the three levels of government, federal, state, and local government. But this has declined as of January to about 716 billion, and then declined further to 647 billion in February, and it's now being projected that this might even decline below 400 billion per month over the next 3 to 6 months. And you need to bear in mind that in order to be able to meet recurrent expenditure obligations, particularly paying salaries, we need about 650 billion to share every month. So once we go below 650, it means that it will be difficult to even meet salary obligations. The budget we had originally, before any revisions, were necessitated by COVID-19. In fact, reflected that we're going to have huge deficits, as well as we had low revenue expectations. So you would only imagine now that these would only get worse. As of 2019, government budgeted revenue generation of 7 trillion and ended up with 4.8. And then budgeted expenditure was 8.9 trillion, but we exceeded that at 9.4 trillion. While the budget deficit, which was originally expected to be 1.92 trillion, ended up at more than twice, 4.6 trillion naira. And in the previous year, 2018, federal government alone had spent 54% of its revenue just to service our debt. And this picture is even more scary at the state level. I say that because in 2019, all the states in Nigeria had budget of about 9 trillion when their internally generated revenue was only about 1.1 trillion, and they had shared from the federation account 2.5 trillion, meaning that their total revenue was about 3.6, and then they had a budget deficit of over 5 trillion naira. So this is the fiscal gap, and this would only now be compounded by the minimum wage, as well as COVID-19 when the price of oil is going down, and then what they can share will be less. I think the only bright spot is the fact that the subsidy for fuel would be removed, and so that could give some fiscal space for the state. Now let's look at the specific fiscal responses by Nigeria so far. So the first one is the COVID-19 Crisis Intervention Fund, a 500 billion naira COVID-19 Crisis Intervention Fund to be established by the federal government. And this would particularly focus on upgrading our healthcare facilities, but also to provide funds for special public works program that is expected to generate 774,000 jobs. That's about 1,000 jobs by each local government across Nigeria. Government will think about an appropriate framework for governance and reporting and transparency around the fund. In terms of subnational support, the federal government will draw down on World Bank facility as well as additional financing from REDIS, that's the Regional Disease Surveillance System Fund, of about $100 million. And this will be available to provide emergency support to the states as well as the Federal Capital Territory. Also, the federal government has a 102.5 billion naira availability of resources to provide direct intervention to the healthcare sector. To some states, already the NCDC had received 6.5 billion naira in disbursement, and Lagos State also had received 10 billion naira. There would also be withdrawal of 150 million US dollars from the NSIA Stabilization Fund. Effectively, this was the reason why the fund was created, and it's now time to take advantage of it. So this $150 million would augment the FAC disbursement for June at a point when it's expected that the available funds and revenue to share would be much lower than is needed to cover recurrent expenditures. Debt and interest moratorium will be provided to states on federal government and CBN funded loans to create some fiscal space for them. Budget revision and funding, essentially the key assumptions underpinning the 2020 budget will have to be revised. One of that is the price of crude oil. We have to go down to $30 from $57 per barrel, while production will now be down to 1.7 million barrels per day, down from the original budget of 2.18 million barrels per day. Various concessional fundings will be obtained from the World Bank, African Development Bank, Islamic Development Bank, and the IMF COVID-19 Rapid Credit Facility. Altogether, this will be about over $6 billion in funding. Nigeria has no intention to negotiate or enter into any formal program with the IMF, either now or in the near future. And then there will be, as a result of COVID-19, a downward adjustment to various revenue projections, including those from customs and proceeds from privatization exercises. The Budget Office will work on a revision of the 2020 Appropriation Act, as well as the 2020 to 2022 Medium-Term Expenditure Framework and Fiscal Strategy paper. In the area of tax reliefs and allowances, the Finance Act 2019, which was signed into law in January of 2020, already has provided some reliefs. So for small businesses with turnover below 25 million, their corporate income tax rate is going to be 0%. They're exempted essentially. While medium-sized companies of turnover between 25 and 100 million, we pay 20% rather than the previous 30% that they used to pay. Then expansion of VAT exemption to cover more basic food items, medical and pharmaceutical products, which should mostly cover the items needed to fight COVID-19, apart from a few additional items, which I believe government should consider including in the exemption list. The minister would issue an order to ensure that donations by companies into COVID-19 funds will be tax deductible. And I think this is good. We have a provision in CETA that should generally allow deduction for donation, but there are some restrictions. So this order will be useful in trying to eliminate those restrictions. The other dimension is for states, because individuals don't pay corporate income tax. So for individuals who will be making donations in support of the fight against COVID-19, and the states have to find an arrangement to ensure they get tax deductions. Additionally, government would release and consider enhancement to the hazard allowances of federal health workers and they're advising states to also do the same thing. And finally, in terms of the responses, is the coordination. It's always better to have this level of coordination because this is a national disaster, so to say. It's not to do with federal government or state or local government. So the better coordinated we are, the better our ability to fight and win the war against COVID-19. So the Economic Sustainability Committee, led by the Vice President, would coordinate other responses of government, including those of the Central Bank and those of the Ministry of Finance, Budget and National Planning, Petroleum Resources, Ministry of Health, as well as Trade and Investment. The tax and other measures that are being introduced are equally important. So by the tax authorities, FRS had introduced online filing, given that people may not be able to move around. And then they have established protocols for communication, physical meetings where necessary, tax audit to be done almost entirely online. And then for LRS, that's the Lagos State Internal Revenue Service, and the FCTRS, they've also pretty much just extended the deadline for filing returns. The National Assembly has two bills. The first bill, which has been passed by the House of Representatives, is on economic emergency stimulus bill, with the objective to provide temporary relief to companies and individuals, protect employment, eliminate fiscal bottleneck on the importation of medical items to cater for the well-being of Nigerians. And the measures here include job protection. Whoever is able to retain their employees during this period would get 50% rebate of the PAYE taxes that they have paid. Oil companies are not eligible. So again, this is well intentioned, but not likely to go too far. For example, if you have employees and you pay them about 30,000 naira per month, the PAYE tax is under 500 naira. So which means by keeping the employees and paying them 30,000 naira per month, you only pretty much get about 250 naira back from government, not sufficient to make anybody keep their employees. There's also deferral of mortgage payment, but only about 45,000 households benefit from this facility, according to a report by Business Day towards the end of 2019, as well as import duty waivers. There's a second bill to provide free electricity to Nigerians for 2 months. Again, most Nigerians are not asking for free electricity. They're asking for electricity to be available and then to pay the right amount for those services. Other interventions include the immigration with travel restrictions, suspending visa on arrival, NICDA expanding or extending the time for filing returns by a couple of months, where the NCC, very importantly, had confirmed that there's no correlation between 5G technology and COVID-19. Then the Securities and Exchange Commission have also extended various filings. Lessons from rest of the world, which is always good because we're not dealing with this alone. It's a global pandemic, so whatever we can learn from the rest of the world might be useful. So essentially, these interventions are in 4 areas: area of tax, legal intervention, immigration, and economic interventions. So in just putting it all together, we have seen countries where they have put moratorium on repayment of loans because of liquidity challenges, countries that are supporting their businesses to retain employment through employment reliefs, impairment write-off. So what's going to happen is you have impairment of assets as a result of COVID-19 pandemic. You have to write off those impairment. They hit your profit and loss account, and then you have no accounting profit. But then the taxman disallows it and asks you to still pay tax. So what some countries are doing is just allow you a one-time write-off for for tax purposes. It's not a giveaway by government, it's just recognizing the challenges around liquidity. We have interest-free loans and force majeure. Countries like Singapore, for example, had simply just enacted a law to say that any contract that you are unable to perform as a result of COVID-19, you won't be liable for that. Imagine dealing with COVID-19, and then after that, you have to then deal with paying compensations for failure to perform your contract. Um, in fact, they also have, a law to redefine their bankruptcy requirements. So, what would make someone bankrupt or declared bankrupt previously are now being relaxed, because really, otherwise, a lot of people will be bankrupt this time. We also have issues to do with mortgage relief, tax waivers, and we've seen countries suspending anti-money laundering to say if you have money to contribute to support government fight against COVID-19, just bring all the money you have. We will not ask you questions. And there's also targeted cash transfer to the most vulnerable. My final thought. I think while we go through this, nobody should pretend that it will be easy, but at the same time, it's also not impossible. We have dealt with economic challenges in the past of similar magnitude, maybe differently. But this time around, we must not waste the crisis. So, for example, people like me are happy to hear that government has now removed fuel subsidy, because we think that the benefit was not going to the poorest people in society, and it was creating the avenue for corruption, wastage, and leakages. Government is better channeling the savings to take care of the vulnerable people, provide infrastructure, and invest in human capital development. Nigeria is affected by what happens here in Nigeria as much as what happens outside, because without growth outside Nigeria, then the consumption of crude oil will not go up, which means oil price will not recover. And oil price not recovering, at least in the short term to medium term, means that Nigeria's economy will struggle. Then there's some ray of hope in that regard, as China is getting back to normality and OPEC Plus are working towards striking a deal. We should consider other issues during this period. For example, in terms of executive compensation, what happens to CEOs, to directors who have share options compensation, and the share prices are down because capital markets are struggling worldwide. So if someone, for example, is doing a retirement, what happens to them? Is it fair to punish them for something they had no control over? Again, like we said before, we should also look for new business opportunities in this period. There are some sectors that are doing much better than before COVID-19, telecommunications, logistics, that can do online delivery, for example, and even online businesses themselves. And companies, we recommend, should develop a frequently asked questions to address issues that may be important to their employees, their suppliers, and other stakeholders. In the end, we all need to play our part, and ultimately this time also will pass. So in conclusion, I like this quote, which is attributed to John F. Kennedy. And it says, the Chinese use two brushstrokes to write the word crisis. One brushstroke stands for danger, the other for opportunity. In a crisis, be aware of the danger, but recognize the opportunity. It's not sufficient to complain. We should not even panic. We should also think about how can we get opportunities for ourselves, for our organizations, and most importantly, for Nigeria. And by the way, we are also trying to help in our own little way at PwC by providing resources. One of that is our Tax 247, which essentially has different laws, treaties, tax cases. But because of COVID-19, we have added a new feature with COVID-19 resources. And you can download this app from the App Store. as well as the iOS store for those who use Apple products. So thank you very much for paying attention to me. As part of the survey for registering to participate at this webinar, we asked our respondents certain questions to be able to get a pulse and the feelings and the decisions that people are beginning to think about and might be making in the nearest future. So I'll share the findings with you just so this can inform how we also react or respond to these issues. The classification of organizations that responded to our survey, over 2,700 respondents, cut across multinationals, large local firms, SMEs, NGOs, government enterprises, and other sectors. In terms of their roles, we had people who are at the role or the level of managing director, CEO, business owners. That constitute about 20%. And then we have CFOs, finance directors, other executive directors, as well as managers, public officers. The respondents cut across 21 different sectors, including agriculture, banking, insurance, telecommunication, oil and gas, retail, healthcare, transportation, education. Pretty much this covers all the major sectors of the economy, including entertainment. We asked our respondents how long they envisage that the impact of COVID-19 will last. Interestingly, this seems like a split, with about 22.2% believing that this will last less than 3 months. And I wish I can share their optimism. We have 31.6% thinking that this will last between 3 months to 6 months. 24.1% believe it will be anywhere between 6 to 12 months. And there is another 22.2% who are of the view that the impact of COVID-19 will last longer than a year. In terms of the most pressing business needs for our respondents, it turns out, as we expect, in large measure, that the number one need for them is liquidity, and that's the immediate cash to be able to pay their bills as they fall due. And this will range from salaries to utilities, paying their rents. And the second most pressing need, interestingly, is safety of staff. And this is good because it means that in the midst of all of these, businesses are not just focused on their own survival and profitability. We are also concerned about our people. And the number three is the ability to work remotely. People are concerned about the quality and the availability of infrastructure to work remotely during this period, particularly because of the lockdown in some major cities. In terms of how COVID-19 will affect the decision to retain staff or to lay off, this is good news. 78.4% of our respondents will be retaining all their staff during this period, with only about 7% or altogether about 22% will be laying off staff, ranging from 5% of their workforce to over 20% of their workforce. One thing to note here also is that a number of people who responded indicating that they will retain all their staff are not the business owners and the CEO. So it could well mean that this can be interpreted to say that they are not aware of any plans to lay off. And hopefully this is all true and will remain so. Now, for those who are planning to lay off, we then ask whether government intervention in any way would influence their decision. And for 55.3%, it doesn't matter what government does, it will not influence their decision to lay off. And then we have about 12.4% who would only retain their staff if government will bear the full cost of their salaries. And then the rest of the respondents are going to retain different numbers or percentages depending on the level of government intervention. In terms of the investment decisions, we find that 12.9% are actually seeing more investment opportunities as a result of COVID-19 and therefore would invest more. But then sadly, about 56.7% will delay their investment, and around 3% would actually close down or exit their investment. As much as nobody wants anybody to lose their investment, I think 3%, is an indication that this is not as bad as many people would have thought. But then the point is, what can we do to actually ensure that the 3% don't close down and the people who are delaying their investment, who are in the majority, do not delay their investment, because these are also the things we need to be able to spur development and create employment for our people. We asked our respondents their assessment of government intervention so far, and then about 23.8% thought it's grossly inadequate, with 43.9%, nearly 44%, believe it's inadequate. We need to mention that this survey was being conducted at the same time, just about the same time that the Honorable Minister for Finance, Budget and National Planning was releasing the most recent fiscal policy interventions by government. So it is possible that these outcomes may be different now. So we encourage our participants to indeed go back and edit the results that is submitted to us in the event that the assessment is now different. We asked our respondents in what areas would they like more government interventions. Number one is tax relief, and number two is in the area of providing loans at zero or low interest rate. And this is understandable because really liquidity was the top concerns for our respondents. So which means being able to access loans at zero or low interest rate is important in solving that particular problem. And the third area where people will want intervention from government is to provide free food to the vulnerable people. Now, we then ask again, how can private sector support government? In what ways can this be done? So it turns out that 85.3% of our respondents prefer that they're more suited to provide items, equipment, and facilities to support government in the fight against COVID-19, with actually only about 10.7% who would consider donating cash to government and government funds. So overall, this survey, while nobody would want any downturn in the economy or even any layoffs or any liquidations, it's not as bad as many people would have thought. So the key message here is, for while people are thinking about how do you get through COVID-19, also look out for the opportunities, and for policymakers to design their interventions to address the most pressing needs of our people, corporates, individuals, large firms, small firms. Thank you very much.
Thank you very much, everyone. I know we had some challenges, but I could see from the comments that everyone was significantly contributing. I also want to thank the almost 2,700 people who participated in the survey.
Thank
Our
you.
PwC remains to build trust in society and solve important problems. As I said in my opening remarks, we'll continue to partner with individuals, governments, and other establishments to address this scourge that we're facing. In this regard, let me just say that we are specifically going to be setting up a knowledge center valued at about 400 million naira to support federal and state governments in their economic response to pandemic, specifically providing complementary business sustainability support services to small businesses who are employing between 5 to 50 employees. These are the people who are likely to be more impacted. So this knowledge center will be available to those, especially those who also retain their staff during these very difficult times. Thank you very much, and please keep safe.